And because I'm that dude, I was just talking to somebody today about how, it wasn't all that long ago. I used to do 2 videos a day, but I didn't do the weekends. That was my time off. The hell with it. We don't have to do these videos every day. And quite frankly, sometimes it doesn't seem like there's much to talk about on the weekend. And before that, I would do 1 video, maybe 2, 1 video, maybe 2. Didn't do 1 that day, didn't do one that way. Okay, here's 1 or 2. I don't even have to try to find stuff to talk about right now. You could stop the whole cryptocurrency thing, like pretend cryptocurrencies never happened. And I'd still have enormous things to talk about because of what the hell's going on across this planet and in our country. It's just incredible. And one of the things I like talking about is the ridiculous housing market and anything that goes with it. Speaking of, another Wolf Street article. Wolf Richter's website. Manhattan. Oh, okay, first of all, the Chinese. What happened? They've been pulling out of Toronto. Oh, well, that's because they levied the 15% tax thing and all that. Okay. But hold on, didn't we see some numbers in California the other day that said kind of the same thing was happening? We're not levying any tax things on these Chinese buyers. What happened? Why are they pulling out? Well, here's another one. Right? 1 time, that's a one-off. 2 times, hey, there might be something here. But 3 times, it's a trend. What's the truth? Truth always goes through 3 phrases. First, it is ridiculed. Second, is violently opposed. Third, it becomes common knowledge. So if you want to take that into what I'm talking about now, you could say, first is a one-off. Second, hey, we might have something here. Third, okay, this is for sure. Right? Common knowledge. The common knowledge is we got a problem with real estate. Okay? Manhattan office bubble fizzles without big Chinese buyers. Well, that's because they're gone. Right? Fake housing bubble again. Not really, well, hold me back up. Not really fake. It's not fake. It's a real bubble. I use the word fake because it's this other ingredient is in there that normally isn't there and shouldn't be there. That's called an external buyer gobbling up everything. And remember, this was months and months ago. I remember doing an article, reading about an article, and it was talking about how many Chinese buyers literally were like moving that market. And it was like I don't remember the numbers now. I can't tell you, but it was like, it could have been like 20% or something. It was like ridiculous. That many are coming over. Holy crap. No wonder why the markets keep going higher. So now they're backing out, apparently. That's what the point is here. Sales volume in Q3 plunges 67% from 1 year ago. Again, we didn't have any crazy rules, taxes, tax the Chinese because they're pricing us out of our own houses like they do in Toronto and wherever. Nope. Come on over if you want to keep buying. Manhattan, the biggest, most expensive trophy market in the U.S. for commercial real estate, used to be particularly appealing to exuberant foreign investors such as Chinese conglomerates, but in the third quarter, sales volume of large office properties, minimum of 5 million and 50,000 square foot, plunged 67% year over year to $991 million, the lowest in 5 years. It was down 90% if you look back at the peak in Q1 2015. Huge. That's huge numbers. It's gonna be huge, Tampa. Little shout out to Billy Facillo Kia on the radio. Love that guy's voice. It's gonna be huge. Yeah, I can't even say it like him. Nobody can. The guy says it perfectly. Q3 2017 might signal a return to normalcy for the highly sought-after Manhattan market. The report by Yardi Systems, commercial cafe, commented. The chart shows, which let's take a peek, shall we? Let's do it together. Together forever and ever. This chart shows the dollar sales volume of large office properties. The $991 million in Q3 is rounded up to $1 billion. Manhattan office sales, again, deals over 5 mil, 50,000 square foot. 2014, 2015 peak, way down here. All of a sudden, oh, everything's good. Oh, never mind, no, it's not. And then we have this little nonsense. See, because every year it looks like there's a nice peak, right? 2014, it's up for 13. Peak, last quarter. Next one, really not a peak. I mean, it's kind of all the same in these last 3 ones. Whatever, second quarter. But then, 2015, man, 10.1 peak. Same thing happens here. And it's interesting because it's pushing it back a quarter, right? The peak's the first quarter of 2015. It's the second quarter of 2016. And actually, yeah, it's actually the second as well. So never mind, but it's another peak. but the peaks are getting smaller. What does that mean? Again, trend. It's not a one-off. This is a trend now. The number of closed deals plunged 40% to just 6 transactions, according to Commercial Cafe. That's down 71% from its peak in 2015, quarter one. The average price per square foot fell 19% year over year and is down 32% from the peak in quarter one 2016, but is up from quarter one 2017 and about flat with quarter three 2015. Once again, what did Cliff High tell us all in advance? Housing market, starting with commercial, big shot, whatever real estate, is going to take a bath first. But don't worry, it'll be coming to other places and down in the not just other places, but down to the residential market, which we've seen in quite a few stories on that already. But I feel, again, baby, you just ain't seen nothing yet. And then Jay Snip 4 looked at you with those big brown eyes and said, baby. Here's something that you're never going to forget. Well, if we all lived through it, of course. Could you forget 2008? Nobody forgot that. The largest deal was the $465 million sale of 375 Hudson, a 19-story, 1 million square foot Class A property acquired by Trinity Real Estate, the real estate arm of Trinity Church, 51% stake. Hold on. A church has a real estate arm. I thought you should be taking that money and donating it and helping the poor, feed the poor, and, that old chestnut. No? You're not buying real estate. Okay. Norges Bank, 48%, and Heinz Interest, 1% stake. What's sorely missing? The big transactions at inflated prices by Chinese buyers, such as the $2.2 billion purchase in May of 245 Park Avenue by the Chinese conglomerate H&A Group that had boosted quarter two sales. The deal was more than twice the size of the 6 transactions in quarter three combined. At $1,282 per square foot, it was also among the highest price per pound for this type of asset ever recorded in Manhattan, as it has been described. Those trophy purchases by Chinese conglomerates really moved the needle. But now the large Chinese conglomerates that had considered the Manhattan office market their trophy hunting grounds were absent. This absence follows the crackdown by China's State Council on cross-border transactions. Its guidelines spell out what Chinese companies can and cannot acquire overseas to promote healthy growth of overseas investment and prevent risks. What's another thing the Webbot told us about? This whole real estate thing would lead to, ultimately, and I asked then, I'll ask again, you see this, let me know. Like, send me an email kind of a thing, let me know. Through my website, realistnews.net. Chinese officials coming over to other lands, probably America, Canada, for sure, but other lands, period. And basically saying our citizen who didn't have the authority, broke the law, bought this property. We're here to collect it. It's ours now. And then whether they keep it or sell it, whatever they do. But I haven't really heard of anything like that yet. But it should be coming. And when that happens, should it happen, of course, because the Webbot's not perfect, but should that happen, do let me know, because I'd love to say Webbot hit on that. Some transactions are still desirable according to the guidelines, with a big emphasis on China's Belt and Road Initiative in Central Asia and on companies that take the lead to export China's superior technology and equipment, upgrade the nation's research and manufacturing ability, and make up the shortage of energy and resources through prudent cooperation in oil, gas, and other resources. Other overseas investments will be restricted, including real estate, hotels, and entertainment. So here we go. Over the past few years and building up into a powerful crescendo that culminated just a few months ago, Chinese conglomerates have been buying up whatever they could get their hands on with precariously borrowed money, but now they're being reined in by Chinese authorities who are worried about the soaring debt levels of those conglomerates and about their acquisitions at inflated prices and about a financial crisis that these debt levels could trigger when they go bad. Now, he didn't say if, when they go bad. And trophy markets such as Manhattan are among the first to feel the effects. U.S. Treasuries with maturities of 2 years or less have taken a beating, and their yields have been soaring but the yield spread has collapsed to the lowest level since early in the financial crisis, and even the Fed is worried. Read U.S. Treasuries rate hit 9-year highs. Again, I'll link to all my articles that I read, and you can check them out if you do so desire. So yeah, real estate, the Chinese buying up everything, and remember the one, was it just a day ago I did this one, or 2 days ago? The Chinese government is moving all the peasants. Remember that one? They're moving the peasants and the poor people into the ghost cities, not the ghost town, a ghost city. The big giant skyscrapers, the malls that were empty, they're moving these people in, either free of charge or heavily subsidized, right? So they're paying for all of this. And that's the name of the game now. Subsidize everything you can, make anybody that's got any kind of paycheck coming in pay for it, and hope you get those democratic votes. Of course, now China, communist China, a little different. Ain't no democratic votes happening over there. But the Communist Party has the same mindset as most democratic governments. And I do use the word Democrats versus Republicans because if you look at history, many dictatorships, if not all the ones I've actually read, believe it or not, say that particular party, when Hitler came, there's this one, that one, Mao and Stalin. It's like a version of the Democratic Party. It just happens to be that way. I'm sorry to say that, but it is. And that mindset in China is, we don't want to ever lose power or have an uproar or uprising in our country, so let's just feed the beast. Oh, we'll clothe you, we'll feed you. Everybody, all the rest of you Chinese who are moving up to middle class status, you're now eating meat and going out for dinner and things, we need you to foot the bill. And in hindsight, we're going to take more money, print more money, borrow more money, and pay for more stuff. So my question is to all governments of the world, why in the hell are any of us paying taxes? You guys could just print the money like you do now. Even with the interest attached, which is my biggest complaint, just print the money without interest. Just make the money, print it, set a value to it, and pay your goods off, pay your bills. Which means we don't have to collect taxes from people. We don't need property taxes. We don't need income tax. You need none of it. You're going to print all the money we need. Government pays for itself. Plain and simple. So even if you're going to charge the interest rate, just do what the Federal Reserve's doing. We're going to add that to the balance sheet. Like I said the other day, they're supposed to be removing the balance sheet, lowering it, and we just added $10 billion to it on the first month. They said that's when it starts. We're going to knock off $10 billion. Or I don't know the exact amount they're supposed to knock off. I thought it was $10 billion taken off, but we've added $10 billion. It's gone up $10 billion. First month. How's that working out for us? Yeah. Now we're starting to know why Ben Bernanke gave his little speech and blogged about it. Maybe we could just leave the balance sheet at $4.5 trillion. As a matter of fact, adding to it, I don't see how that would hurt either. But Bernanke, you promised us we would remove it completely, back down to the level it was, $500, $600, $700 billion by like 2016. He may have said 2015. I don't remember that. I always get confused. 15 or 16. Anyways, nonsense. Utter freaking nonsense. Take care.